markets responding dramatically, as we've been discussing, to the current lead by Donald Trump in the Electoral College count. I want to bring in Bloomberg's Joe Weisenthal and Guy Johnson, along with RBC Capital Markets Chief U.S. Market Strategist Jonathan Golub. Jonathan, we were talking a few moments ago before that news came in from Florida, just about the degree to which the market may have priced in a Hillary Clinton victory. Your reaction to what we've seen so far tonight?
Well, I mean, obviously the news is a shock, and all evening, instead of watching, I mean, obviously I'm watching the electoral map, but I'm watching the, what the market is doing. I'm watching the S&P. I'm watching the Mexican peso, and it's telling me what the odds of a Trump victory is. We put out a note today saying if Trump wins over the next couple of days, it's a 10 to 12% market pullback. The market is close to 5%. The odds right now, it's basically saying, are 50-50. It's doing exactly what it's doing, which is discounting this election in real time.
Yeah, I want to bring you in on the Brexit comparison in terms of what we're seeing, not only in markets, but just in terms of this divided nation that we're seeing and how he's capitalized on that. Is it that people just didn't expect that type of wave, Brexit Part 2, that so many people are calling it tonight, to really take place tonight?
Well, you look at the map, and the map tells you the exact story of what we saw in Brexit. The metropolitan areas, the big metropolitan areas, where the financial markets are centred, that's where the kind of the shock is this morning, because they're beginning to understand that they don't understand what the rest of the nation is thinking. And that was exactly what it felt like in London the morning after Brexit. That shock, that sense of a lack of understanding, a sense of lack of connection with the rest of the country, because they're voting in a way that you never expected them to do. And that, I think, is what we are now feeling here. It does feel like Brexit Part 2, maybe Brexit plus plus. And then you think, and you start extrapolating further forward as well, Italy's got a referendum coming up. Then you've got the French election, you've got the Dutch election and the French election. You've got all of these things, and then the markets are going to start looking at those as well and starting to price those factors in too.
Joe Weisenthal, Brexit times 2 here. What do you think?
I think the point you just made is the crucial point, which is that, after the Brexit vote, and if Trump ends up pulling it out tonight, the mind starts to go to where else you would see trouble spots. I think, I'll be very interested to see what Italian markets do tomorrow, because they rallied really hard on Monday. They were the biggest gainer yesterday on the day when it looked like markets were pricing in a Clinton victory. When people start asking where's the next big geopolitical risk in there, they're going to be talking about that early December referendum. It's not a referendum on whether they're going to stay in the Eurozone, but people think it could implicitly lead to that if Renzi leaves. So I think that's what's going to happen. Suddenly this risk that we could have more shock geopolitical events like this will be at the forefront of investor minds. And where does it end?